Hello, everyone, and welcome to today's session. On the behalf of American Petroleum Professionals of Iranian Heritage, APPIH, it's our great honor to have another webinar on the title of the energy transition. Hopefully, we have a great moderator today, Mr. Moji Karimi. Moji is the co-founder and CEO of the Cemvita Factory, a biotech startup on the mission of the create a carbon negative future by transforming CO2 into valuable product. He's multidisciplinary entrepreneur and engineer who helps initiate, ideate, develops, and commercialize groundbreaking technology with a proven track record of taking ideas to the market. He has a very great idea for the energy transition, and I would not take many times that I would love to transfer the microphone to Moji to start today's meeting. Thank you.
Thanks, Amit, for the kind introduction. But today is not about me.
Yes.
I'm here to ask the questions, and it's a pleasure and honor to have our guest here today, a good friend of mine, Nader Daylami, who has experience across the span of from investment banking to working at operating company to starting his own company to investing to SPACs. And it's quite amazing, Nader, what you've done in such a short amount of time. So I'm hoping today you could spill the beans a little bit and share with us, some of your secrets along the way and the journey that you're on. And what I was hoping was to just start off with, telling us about your background and how you went from getting a degree, in economics and mathematics to then, investment banking to then oil and gas, and make this transition, to being part of a founding team for an operating company, and then all the way to energy transition. And then, then we could hopefully spend more time in getting your thoughts around energy transition opportunities. A lot of the members in the audience are evaluating options, as professionals in oil and gas, what they could do within oil and gas, outside renewables, all around energy transition. And then we want to definitely leave room at the end for questions also in the audience to make this more of a interactive session. But to just get us kicked off, please tell us about yourself, your background, about your journey, and I'm sure a lot of good stuff will come from there.
Sure. Thanks, Moji, and thanks for those kind words and for introducing me. So I'm Nader. Thanks, everyone, for the time today. Pleasure to be here and talk about energy transition and this, as Moji said, this kind of very unique journey that we're all going through in the world right now with regards to energy. But to kick it off, so I started really majored in math and economics, as Moji mentioned, at UCSD. And that's also when I realized there's really a few different ways for me to kind of play my career after college. It was lawyer, obviously there was doctor, there was engineer. For me, the thing that made most sense was math and finance. So I really focused more on the quantitative side of things throughout my undergraduate time. I went to UC San Diego. But it was an interesting time, and you'll notice a few themes kind of in my career throughout, the 3 or 4 key junctures. But timing in life for all things is super important, but very important for your career. And I remember, coming from UCSD, which is traditionally more of a quantitative. Honestly, their best and what they're most known for is biomedical engineering. Their math program was good, but it was definitely more research and academic more than anything. So what I was doing was trying to make it more practical and actually see if there was a way to get into, traditional high finance, investment banking, consulting, etc. And this is now 2008, the summer of 2008, when I was supposed to start having my conversations with banks for internships. And September 15th, which was 1 week before school started as a junior year, Lehman Brothers declared bankruptcy, and Bear Stearns followed maybe 1 week later. So not only was I coming from, more of a, less traditional path to banking, but there was also a complete, end of world mentality in the investment banking and finance world. So it was the first kind of challenge in trying to kind of really, convert a struggle into what ultimately turned out to be a good outcome. But I actually am a firm believer that these things actually make you stronger and make you more resilient and have more ambition to actually get there. Graduated from UCSD in 2010. I ended up joining Morgan Stanley's Houston division, focusing on M&A and capital markets on covering natural resources broadly. So that was energy. Within energy was upstream, midstream, oil field services. Was there for a little over 2 years. Really covered all things that come with that high transaction oriented environment in that arena. But it was strictly oil and gas. At that time, it was, not many were really focused on, at least in my experience, were not really focused on the renewable arena. The capital was flowing to oil and gas. And this is kind of the onset of the renaissance of shale, of upstream shale, which all of a sudden became after 2000 with tech. I mean, the next big capital sink from an industry standpoint was energy. It was shale, and it was an opportunity for the US to become energy independent. And Wall Street was open to give as much capital as needed to get companies to do so. So it was a very interesting time. Between 2010 and 2020, the amount of capital that was introduced and brought and raised in the oil and gas sector was monumental. And also Wall Street loved it because, unlike other industries, oil and gas is very capital intensive. So it puts a smile on most bankers and private equity faces from the standpoint of fees and things like that. I joined actually after Morgan Stanley. I quickly realized I didn't want to stay in banking, and I wanted to focus more on either the operating route or on the investing side. I was still kind of mixed between the two. I had a very short stint at a private equity fund that was based in Boston. That was a natural resources and kind of broad power and mining outfit called Denham Capital. I joined there very briefly when they presented an opportunity to join a team of 2 or 3 folks who had just had a successful exit from an upstream company, and they were essentially 4xing their commitment to essentially start the second round with the same team. And they said, hey, go there for a few months, spend some time really just providing kind of financial horsepower and analytical prowess to make sure this commitment is kind of in good hands, and you'll also learn, obviously, what goes into acquiring an asset, what goes into putting together a bank group, a risk management plan, a true strategy and business development execution, and then come back to us. Long story short, after 4 months, I realized how fun and the entrepreneurial route was. It was, people were setting up, the boring things of setting up HR and Comcast and getting your phone line set up, but all of a sudden, actually sourcing and identifying what are good opportunities to invest large amounts of capital into was super intriguing to me. And in the course of 3 months after my quote unquote, I guess I was alone to this company before I could go back to the sponsor, we had written probably 6 or 7 different offers, and we were under contract on one large position in Colorado. It was probably 60,000 acre position in the Piceance Basin. It was producing probably 30 or 40 million cubic feet of gas a day. It was about $300 million acquisition purchase price. Put that together from PSA to closing, and all the intricacies that go into a transaction were so lost, I realized, when you're in the banking world or in private equity. All you see typically is a press release, so-and-so company bought so-and-so company, and that's kind of it. But there was so much more into the actual planning, the fundamentals, besides the valuation, the actual how you stand up that organization from a engineering standpoint, from operational standpoint, from HSE standpoint. All these things just, for me, seemed almost like second nature, but it was very intriguing and I loved it. Mm-hmm. From there, I decided to not go the traditional private equity route and say, these guys were successful in the past. We put together a big position. At that time, it was probably, we were 4 people. I was a consultant, and we turned into probably a 45 or 50 person organization with a 3 or 4.
Bruin?
No, this was Ursa.
Ursa.
And we put together a real operating company. We sold the majority of that asset of that company in 2014, when before the first commodity crash, which was in November. Mm-hmm. We almost sold the rest of it when, lo and behold, Black Friday, Thanksgiving in 2014, when oil price and gas prices sympathetically fell from 90 to 70 to 50. And that was the second juncture in my career from a timing standpoint that really, I think, defined my career.
A lot of people have memories about that Thanksgiving, by the way.
Oh yeah,
I heard that a few times.
Yeah,
people vividly remember that Thanksgiving and what was going on in the market. I wanted to, before we go to kind of this transition, ask one important question, because you kind of really quickly from school to investment banking found your way in the middle of these major deals, really in the heat of like being, in the oil and gas business. It feels like you were in the right place in the right time, but I wanted to ask how much of that was your strategy, because you had to make a decision to say, I want to leave Morgan Stanley and go do this other thing.
Yep.
That's not normal. Like usually people will stay and say, I need to become partner here. And then of course, good salary and everything, but you stop yourself and saw a different future, which then you realized, what was your thought process making that choice? Because we're going to talk about that later. You've continuously been ahead of the game in like going into creating this next version of yourself. So can you talk about that first transition?
Yeah, no, of course. And you're right. Most people, when they have that steady kind of, coasting trajectory from a career standpoint, why change it? For me, I would walk into the office every day and I would see the more senior people and I would tell myself, does this excite me? Is that someone that I actually can envision myself being when they're at year 15 or 10 or 20? And the answer every single day, and I spent many hours at Morgan Stanley's office, was no. It was what actually excites me as stimulates my brain and gets me, kind of drives a passion. For me, it was either creating something or being part of something that's being created from the early stages. And I think that has continued throughout my career, whether it was Morgan Stanley, whether it was not kind of going to sticking with the private equity path and going to the operational companies, or in the middle of a commodity crisis, in 2014, spinning ourselves out, raising external capital and starting our new company, which was Bruin at the time when everyone was like, why would anyone start an oil and gas company when commodity prices are in such a volatile period of time? So for me, I think every kind of key macro event, a lot of people in the commodity business, a lot of people get scared. That chaos always, to me is more of an opportunity to say, is there a way to actually, creates value for others while also establishing, a new enterprise while doing so. That's always been the back of my mind.
That's amazing. And, you touched on another thing here, which was, when you guys started Bruin, and it was at an unstable time, but what gave you the confidence to say, I could be a co-founder here and go create this company? Because again, typical, petroleum engineer would think, well, I don't know if I have the right experience. I probably need to, do like 5 more years of this and that and kind of build up my resume. And, sometimes you could stay actually in that zone until when it's too late. So when you make those decisions to take those big jumps, like what gives you that confidence and drive?
Yeah. No, that's a really good question. For me, I think from a career standpoint, I've always found it very helpful to have, 1 or 2 key mentors that help, not guide you, but help kind of provide insight into, how either that person is maybe kind of followed through with their career or, places where they can maybe add, give you advice on how you should think about your own career, given what your skills are and what your strengths and weaknesses are. So for me, I had short-term goals, I had long-term goals, but what I realized was if you wait for when you're ready to be in a position, it's probably too late. Like the right time, in my opinion, what I've read and what I've seen from others is right before you're ready for that position is the right time to go, because you are going to be extra meticulous and extra detail-oriented to make sure you execute every step of that way flawlessly. And raising capital for an oil and gas company in 2015 was no different. There was capital that was available, and the question was, can you present a thesis to Wall Street, to private equity, to that sponsor community that was attractive in a way that they saw a way to generate outsized returns? And in my opinion, there was enough, with commodity business, there's a lot of luck and there's a lot of timing. But I think ultimately, if you stay disciplined, if you stay kind of steadfast and true, you can build confidence to go in front of, roadshow and go around kind of the usual suspects at the time for energy investors and see if that thesis, which was your thesis that you generated with your co-founders, was if there was an appetite for it or not. But you have to be willing to take that step, right? And that step involves typically giving up your salary, saying, hey, let's go see if we can raise capital for a month or 2 or 3 months or 4 months without any interim overhead coming in, and going for it. That seems to be the common denominator in a lot of these entrepreneurial stories. I've realized is you need to be able to take a step back and also go for that next step.
That's amazing. So you took all the learnings from Ursa, and now it's the Bruin chapter.
That's right.
And it's the time that everyone's questioning, is this the right time? What are we doing? You guys pulled the trigger. Now tell us the chapter for Bruin.
Yeah, sure. So Bruin, this was probably a few months or 6 months after the first commodity crash in 2014. So this is now fast forwarding to summer of 2015, when 3 or 4 of the key members at Ursa came out and said, if we're not growing anymore, there's really nothing for this management team and this group to actually contribute back to that company. So let's go raise our own capital. We have a thesis. We executed our plan operationally very well to date in our careers. We have experience in multi-basins, multi-commodity exposure. We were able to have a very confident structure to say, hey, we can be essentially a rogue management team to go acquire any upstream assets onshore in the US. And that was our thesis. And it was also a unique time, in our opinion, and from a finance standpoint, where private equity or non-public capital could finally compete with public companies. That was the thesis for Bruin. In the past, oil and gas was prospecting, where you're, or geological engineering shops where you're actually trying to, find a resource, lease acreage, drill a few wells, collect an override, turn it to an operator who's going to do it, to actually drill out that position. For Bruin, the strategy was very different. It was, here's a very unique opportunity for private capital to actually acquire a large producing asset. And by large producing asset, we were going for $1 billion plus acquisition, meaning a very scaled operation. And for a lot of times, these were not held by privates. These were all non-core assets of public companies that you might or might not see in their investor presentations. That's where we saw the opportunity. These were neglected assets by large publics that we felt we could acquire, optimize those assets from a commercial standpoint. A lot of these assets were run by teams that probably spent 1/8 of their time on this particular asset. They were not giving any love to the commercial optimization of that asset, whether it was midstream, whether it was your generic services, whether it was on the drilling or completion side. So there was a way to essentially minimize risk, but acquire a large scaled asset, but optimize it vis-a-vis kind of true, blocking and tackling. A lot of MSAs, a lot of legal work, going through every single vendor, midstream company, and coming, essentially bringing terms to market. And all of a sudden, you could create value by doing nothing but that. And then if your operational team can actually execute on the technical thesis, for us, which was very similar to many others at the time on the technical side, was extracting more resource from the rock using kind of, just general, more technical stimulation from a fracking standpoint. Then if you could hit both of those, then it would be a success. And that was our thesis. That was how we raised, about $800 million of equity capital. And we raised probably a debt financing from a multitude of parties, probably 15 or 20 different parties. We raised a high yield bond, went to the Wall Street. It was a 2-week roadshow to raise $600 million of high yield bond market. And then we had a debt syndicate as well. And the thesis was very simple. It was what I just said. It was, here's a unique opportunity for private capital to finally compete with, the EOGs of the world, the Continentals of the world, because our cost of capital was very similar. And that's what we did.
And that played out really nicely at the end, huh?
That played out nicely. It was definitely a volatile time. Definitely with no, 4 or 5 years in any commodity business, there's always going to be ups and downs from a cyclicality standpoint. But that's when it's also important who you're working with, right? Who are the folks that you decided to team up with and bring on as new employees to get through that struggle at times. And in oil and gas, obviously, when it's good, things are great. But when things, especially with the geopolitical events that have happened in the last few years, there's times where you really hope you have a balance sheet that can get you through all those low points from a hedging standpoint, from a debt management standpoint. But last year we were fortunate enough with the kind of the recent rise in commodity prices to monetize to a Canadian publicly traded company called Enerplus Resources.
Mm-hmm.
So that was last year. We announced our deal in January and we closed in March.
Okay. Well, how did that feel? Putting all that work in, with the thesis, seeing it play out with a good exit. When that deal is signed around the room, what does that feel like? Because that's moment changes people's life.
Yep.
From then on, right?
Yeah, no, definitely. For me personally, it was a huge. It was a combination of a huge relief
mm-hmm.
and a sense of what's next.
Right.
The relief, it was my form of excitement,
mm-hmm.
but in my mind, which is the way it's functioning, relief was in the sense of through kind of especially the last prior 18 months, it was
mm-hmm.
extremely, probably the most volatile time in
mm-hmm.
history for commodity prices. Oil went negative,
mm-hmm.
gas was under $1, and all of a sudden that rapid of a velocity of time that commodity prices had recovered back to
mm-hmm.
mid 60s, and gas was probably at 350
mm-hmm.
per M. There was a relief in the sense that nothing had happened between signing and closing geopolitically between Russia and Saudi Arabia and OPEC to actually kill the deal.
Right.
Because in my prior life at Ursa, something had happened
mm-hmm.
in 2014 where we almost had the rest of our assets sold, and then OPEC
mm-hmm.
did what they did in Vienna. So relief was from that standpoint.
mm-hmm.
And two, I made a very conscious decision, honestly, probably starting 2020. Like a lot of us had extra
mm-hmm.
time. And we were not in the office. We were home researching on what's happening in the world, but also what interests you, right? It was a very unique time for whether you're an employee, whether you're a founder, whether you're a parent, grandparent. Everyone had a very, I think, altruistic, introspective time with themselves.
Mm-hmm.
And for me, it was very clear that I made a conscious decision that I wanted to do something that was new, where my background and energy could
mm-hmm.
fit. And the logical arena for me was energy transition. So
mm-hmm.
that closing table, which was in mid-March, I knew the next call, the next day, I was going to be 100% dedicated to seeing what avenues, the energy transition or the clean energy, renewable energy industry could actually offer, and see where I best could fit in that arena. Because it was definitely an arena that was getting a lot of attention and a lot of more media attention, but also a lot more capital. And for me, again, my foundation being more of a quantitative finance
mm-hmm.
individual, it was really just kind of trying to match the dots and see kind of how is the best way to really penetrate and break in. Mm-hmm. And what I realized was it's not really breaking into anything because it was so new. Mm-hmm. Like typically in a lot of more mature industries, you're trying to break into an industry, or the mm-hmm. chemicals industry, or tech industry. Mm-hmm. But for energy transition, it was so mm-hmm. it was so avant-garde, it was so nascent that it was, for me, it was a whiteboard. It was a big white space, and the opportunity was massive.
Yeah. So I've had a chance to chat with you and go really layers and after layers deep into technical discussions about CCUS and hydrogen and carbon markets, and you have this ability to really just consume knowledge to the point that you become an expert. Do you have a process for the way that you do that? Do you think your background being more of a generalist with the fundamental, economics and finance understanding helps keeping that open mind to anything, to just go and learn these disciplines? Because we have the opposite scenario is, say for a petroleum engineer, we get so used to the discipline
yep.
that if you were now to go learn about, I don't know, solar or wind, it feels like this is a starting over and such a big challenge. But it seems like you found a way to really ease into learning about this discipline. So how do you do that?
I think a lot of reading and a lot of research. I mean, for me, and again, during the pandemic, when there was this weird time where you just had, you had strong Wi-Fi connection and you weren't able to leave your house. So what are you going to do with it? A lot of people had, caught up on a lot of shows on Netflix, but for me, I was just reading a lot. I did a lot, and I was just getting on the phone with anyone that I thought could be was doing something innovative in this space. Mm-hmm. And at the time, hydrogen was the big thing. It was green hydrogen is the future. It's a non-combustible fuel that effectively can be a true kind of medium, right, for a low carbon future. And it started from there. And then from hydrogen, it's kind of, the multi-sectors within decarbonization have become, fairly commonplace today. But, from there it morphed to parts of CCUS, right, or steam methane reformation plus a carbon capture concept. So then it said, hey, what's carbon capture and what's carbon capture storage and how can it be utilized? And obviously what Cemvita is doing is hitting the nail on the head for exactly just that on CCUS. But I say a lot of research, Moji, a lot of just reading, panels. Because the beauty of pandemic also was a lot of these conferences were virtual.
Right.
And you can just attend them on just like we are doing it today, virtually, electronically, and actually hear, very learned individuals in the space, how they're thinking about it. And for me, the ultimate goal was, again, capital was flowing to energy transition. That was very clear. From net zero commitments to, big private equity funds like Blackstone and Apollo saying, hey, we're actually not going to raise another oil and gas fund. We're going to take that knowledge and take that fundraising efforts and apply it all to energy transition. So for me, it was very exciting time, but it was a lot of just reading and research.
So you do all that research, and out of that comes this strategy around, okay, you could start a company, you could become a full-time investor, you could become more like a management consulting type initiatives. Where did you land, and what was the outcome in what you're doing today?
Yeah, no, for sure. So that's exactly right, Moji. So, for me, it was, so I joined more of an entrepreneurial operating company, start my own with, engineers that actually have a true kind of technical expertise for that sector. You go on the buy side and try to see, what investments, what opportunities could be interesting to invest in from a fund standpoint. Do you raise your own fund? All these things were flowing through my brain for, probably 3, 4, 5 months, knowing that obviously, any decision is going to have pros and cons with it. And it's never healthy to look back in the rear mirror. But, it was my first shot post exiting Bruin to say, I have a clean slate to do anything that I would like to do with energy transition. What's the best way for me to learn the most in the fastest amount of time? And for me, at the time, and a word that's probably everyone kind of sees a lot in the news today was a SPAC, so a special purpose acquisition company. And what seemed most appealing to me about SPAC, more so than maybe a private equity fund or a venture fund or one company, was you can spend, one, you're going to have capital, so it's much easier to speak to companies who also need capital and they're innovating and growing. But you can speak to a high volume of founders and investors in any really subsector within energy transition in a very, very, very kind of short period of time. So it was an opportunity for me to say, I can spend a year or two meeting with 100 companies. And what's the best way for me to do that? Here are the 3 or 4 options. SPAC seemed to be the one that gave me that access.
And they will talk to you happily, because otherwise they are more protective. So
exactly.
you get superficial knowledge.
That's true. Yeah. Every company, typically, companies are always raising capital, as you know, funds are always raising capital. And if you've raised the capital and you have a timeline to deploy that capital, which is one of the unique attributes of a SPAC, they'll talk to you because they know you have to deploy the capital pretty quickly.
What is that timeline for SPACs?
2 years.
2 years. So you create the vehicle and then you have 2 years to fill it in.
That's
with
right.
What the thesis they had.
That's right.
Yeah. So the SPAC that then you created, kind of what was the process and what is the thesis now for that SPAC, which you launched just a few months ago, right?
Yeah. So the thesis for our SPAC, and again during the pandemic, there was definitely a craze of ESG SPACs. And what we noticed with these ESG SPACs, there's probably 75 or so SPACs that were focused on ESG. ESG was definitely another way of Wall Street coining clean energy or energy transition. What we noticed when we actually looked at the companies that were flowing into this category, they were either, one, way too early to be a public company, or two, the employees or the founders of the SPAC were actually not energy experts.
Mm-hmm.
So what you saw was, 2 or 3 guys in a computer in New York who had access to some capital, and then used their backgrounds to say, hey, ESG is the future, clean energy is the future. We're going to find the next biggest company. Let's go to Wall Street and raise a SPAC, an IPO a SPAC. And then when it came to diligence, what do? Hire a bank and kind of go through that process. And what we saw was the quality of the companies that were actually going public through a SPAC were actually not high quality companies, a lot of them, or too early to be public, either from a front facing standpoint or from back office standpoint, from legal, from an accounting. And we started to say, hey, this is an opportunity. We have energy backgrounds, and we've obviously gone through all the ups and downs of from a cyclical standpoint in the commodity business, but more so like I've built real businesses. I've sold real businesses. I've raised lots of capital around those businesses. There needs to be the real solution, in my opinion, for a low carbon future is going to be from the energy community. I've always said it to myself, and it seemed disconnected to me that a lot of these ESG SPACs, which are pitching to Wall Street, hey, we're the clean energy experts. They're not clean energy experts, and they're taking kind of companies that ordinarily shouldn't be public.
Right.
So why don't we actually offer what we think is a solution? Like, here's a solution that can be diligence from energy experts, but have much more mature companies come to the public arena. That was a thesis for our SPAC, and our SPAC is called ESGEN, which we launched and priced in October. So we went a 2-week roadshow, all virtual, and we raised $300 million in our SPAC. And we have 2 years since then to essentially find a private company who needs between $200 to $400 million of capital, who also has the desire to go public, but also has the abilities to be a public company. And we are effectively their vehicle to do so. So we've been speaking with all companies that you would imagine in the energy transition space, from hydrogen to waste to fuel sectors, to sustainable aviation fuels, to renewable fuels, to even on the nuclear side, on fusion, and what you're seeing kind of with these small modular reactors and these very to the grid, microgrid opportunities, smart grid tech. And that was the goal from the beginning, right? Was to speak to as many founders who are essentially executing these phenomenal business plans and seeing, one, learning how their business works, and two, seeing what would be a good fit for the public space, given what we told our investors, which was find a company who's actually generating revenue today, not in pilot phase, who's actually has a path to profitability in the next 1 to 3 years, versus kind of a more futuristic companies that you see. For example, there's flying taxi companies that are public, and they're very futuristic, and the public generally is, when you're going public, you should necessarily be having revenue 5 or 6 years later. There's capital for that, venture capital, but it's very for us, that's what we told our investors, and that's what we're trying to do.
So I have a lot of more questions, but I did want to just pause for a second and ask the audience, if anyone wants to ask your questions, please put those in the chat box, and we could go back to that and start asking some of those questions coming through as well. I see actually already there is a few. Let me just go here. All right. So first question, you could read it, I guess, as well.
Yeah, sure.
If anyone is not seeing that or just calling in, what was a great take-home message for you for new interested people to have businesses for themselves? So I guess, what's your message to entrepreneurs who want to start something of themselves? And then the second question after that is having a CFO for a very small startup vital? And if so, why would that be? What is the right time for having a CFO?
So for the first question, I think for any entrepreneur in any industry, in any generation, I think the common denominator, and Moji, you know this better than anyone, is you need to be willing to take a step in the deep end before you really know how to swim. And you kind of know how to swim. You think you can probably, you'll survive, but that element of that subliminal feeling when you're going down a roller coaster, and you should make it there, but it's really, really exciting, but there's definitely risk with it. I think that's that instinct needs to be, I think I've seen is prevalent with any entrepreneur. It could be an entrepreneur who's leaving a hospital to go start their private practice, right? I think I have the same amount of respect for someone who's doing that versus someone who's leaving, who's a petroleum engineer, reservoir engineer at a major who wants to start their own either prospecting shop or a technology associated with energy that they used to be able to do on the side. So I think, but that common denominator, I think, is what I would say is definitely commonplace. And then for a CFO for a very, very small startup, I'd say it's not vital. I think CFOs, one, are expensive, so I'd say they're not. I've actually always given advice to a lot of my friends or colleagues that are in various stages of kind of life cycles of companies away from hiring a CFO, because I'm saying CFOs, when they come in, they want to dominate kind of the financial reporting one, but the actual culture around finance within a company. So I actually believe, unless the CFO is going to be more of a co-founder that has a strategic element, which my background, I'm the CFO of ESGEN right now, but my background from day one has always been more strategic in business development and commercial than accounting or purely kind of from a controller standpoint. I think the ideal time for a CFO is when you are on a rapid growth pace and you're actually raised, or you're about to raise kind of your first substantial piece of capital. Could be a Series A, could be a Series B, but CFO's early stage, I think the culture of the company should be set in stone before you bring in kind of more C-suite oriented individuals, especially there probably isn't much going on from a finance standpoint and a bookkeeping standpoint for a very early stage startup. And you're probably going to have to give up a lot of equity up front at that stage. That's always been my thought on it.
And it's interesting because you've actually been that person inside a company, but then now you see it from outside. It's like, is this the right time to have someone like me there?
That's true.
So another question from Bobak. Seeing so many underperformed or overpromised companies going public through SPACs, as an investor, what would you list some of the main advantages or disadvantages of SPACs in the clean tech space?
Yeah, so I think that's a good question, Bobak. So on SPACs in particular, I think if you take a step back and pretend you haven't read the news with keyword SPACs for the last 9 months, SPACs from their foundation and their point of that vehicle is to deploy the most amount of capital to a company who needs that capital in the quickest amount of time. The biggest selling point for a SPAC versus IPO was there was less reporting needed to actually effectively become a public company. And there was less of a process with the SEC around filing your S1 and having that comment period and going through your launch and your actual IPO roadshow process. That typically was 18-month process to get your accounting and your back office in order, to actually hire underwriters, draft your S1, which is a very, very strenuous process. What you're going to tell your investors, what your company does. You probably never had done that in the past for your company, and at that formal of a capacity. Making sure all the accounting is in sync as well from an audit standpoint. Any public company needs to have a PCAOB audit in place at time of filing the S1. For a SPAC, you don't. You need to have your PCAOB audit at time of closing your de-SPAC. So the SPAC offers flexibility, because before you're really ready, you can be announced to the public space. And in that time period between announcement and close, that company can actually issue new press releases and saying, hey, we've signed up 5 new customers, or we've engaged in a partnership with IBM, or whatever that may be. And you can build demand and interest in your company. For a public IPO process, you can't do that. It's actually illegal you can't actually say anything that's non-public when you're still confidentially filed pre-public for that reason. So SPACs, generally that was the main selling point for a SPAC. What's happened though, especially in the clean energy side, is what I was saying before. You had a few individuals who saw Wall Street salivating over ESG post-pandemic, forgetting about it, energy on a traditional basis and saying this is the way, and you saw, select individuals and select sponsors saying, we don't need energy experience, capital's there, let's go raise as many SPACs as possible. And some of these sponsors would raise 1 or 2 or 3 SPACs at one time to go acquire 3 different companies and take them public. And you saw, in my opinion, a lot of companies that were very low quality that went through the de-SPAC process, and now they're trading at $1 or $2 a share. And again, we went through kind of the reasons why our strategy is different, but I think it's still a very good vehicle for the reasons that we said. It can be a very efficient vehicle to deliver capital in a very quick span of time, 6 months instead of 18 months. But you can't be too early and you can't be too futuristic. I think the market's sick of that at this point.
And there's a discussion around SPACs going public. At the same time, when you think about energy transition, a lot of the technologies, like you pointed out, are still in the early days, right? Even though they could be game changing, but in the format of technology readiness level, TRL 1 to 9, there's a lot of 3s and 4s, not enough 7 and 8, and a lot of companies are trying to kind of survive that valley of death and get to where they could be qualified for that next step. And you've done your due diligence across the board, like both from your kind of personal investments in some of these promising companies, all the way to really seeing what have you found is some of the common characteristics that you see in the founders or the business models or the way these big companies have executed that have made them survive. Is it more focused because of the technology, or is it you notice things about the management team that stands out that you look for?
Yeah, that's a good question. I think for what I've seen in kind of all my conversations with founders and management teams, the technical thesis needs to be sound. So that's usually the idea that founders will actually bring to market and raise money around. So whatever that technical thesis may be, that needs to be, one, easy to understand. I think is very key. A lot of times when it takes 3 minutes to talk about what your business actually does, a lot of investors kind of they have a very low attention span. And if I always say, someone always told me actually, if you can't describe, what you do on a napkin at a conference or dinner, you should probably figure out how to simplify it. So that's been, one, technical thesis, technical plan, and ability of the founder to actually present it in a way that makes sense. 2, how big is that addressable market? I think is definitely one of the key attributes, secondary to what that thesis is. And then in my opinion, the companies that have done well in the public arena or in the private, later stage private, series C, D, E onwards, are the founders who know when they can't control everything. And they start to actually prioritize recruiting and bringing on key hires, whatever it may be, right? For a battery, long duration battery company, the most important thing is to have customers. That founder is probably having many conversations with customers from day one until the day they hire a key, chief of revenue or a sales commercial chief. But that's not their expertise. And I think the companies that I see succeed are led by founders who know when it's time to bring in key hires that actually can do that on a much more, scaled and high volume basis, but much better, quite frankly, and be able to swallow that ego of, hey, I might not be the best person for XYZ, so we're going to go bring in XYZ and actually dilute some of our equity. But from a long company building standpoint, you're actually creating the ingredients for long-term value creation.
Yeah. So just switching topics just a little bit, because here we're at APPIH, right? So it's actually a good diverse mix of Iranians in the oil and gas. Some are, like myself, moved from Iran. We did our bachelor's. There is a lot of us that are like that. There is those who came before us that, they've already been in the industry for kind of 20, 30 plus years. You come from a bit of a different angle to this because, I don't know if you're second generation or you moved at the early age, but you went to bachelor degree here in the US. have you found, in your discussions, what is it about Iranians that could make them good entrepreneurs, if any? And have you leveraged that at all? Do you think about that stuff at all? Or is it just, base principles, just learning as much as you can and executing?
Yeah, no, that's that question I've thought about a lot. And me personally, so I mean, back at college, even in high school, I spent a lot of time studying history, and I minored in Middle Eastern history in college, and I really enjoyed going to these classes. I would sit in the, near the back of my economics and math classes of the lecture hall, but in the history classes, I would sit in the front. So my context from a historical standpoint was always an interest to me, mainly because of how I'm always curious, because I didn't grow up in Iran and I was not born in Iran. I'm the first generation American, Iranian American. My sister was born in Iran, so I'm truly in my family the first that was born here. I was always, not being from there, being born there, I was always curious how Iran should be interpreted on a global scale. And the only way I could do that, not being from there, not being, growing up there, was to learn about it. And see over time how Iran, functioned from a geopolitical standpoint, from a cultural standpoint, from a society standpoint. So for me, Iran's always been kind of in my head at all times, in the culture, the Persian culture in particular. But I think what I learned, especially in the last, 50 years, was that Iranians have been hugely successful on the entrepreneurial standpoint, whether it was Iranians in Iran, in the industrial age, in the 50s and 60s and 70s, and the amount of, innovation that these companies were able to do, either whether it was on the oil and gas side, whether it was on the kind of infrastructure side, essentially building a first-class economy within 3 decades. And the only other examples that I've seen do that are, countries like South Korea, economies like Hong Kong, Dubai now, but there's very few examples. This is now. Then it was much harder to pull these things off. So I've always had in the back of my mind a high respect for Iranians as entrepreneurs. And I was always thinking, obviously post revolution and kind of the diaspora of Iranians that are not all over the world, you see so many Iranians not in Iran who have founded things that we use every day, right? Whether it was Dropbox on VDRs, or whether it was Qualcomm from a chip standpoint, like you name it. There's things that are. Or Zeus, that's true. Or Zeus, yeah. Or Tinder for dating, yeah. And I think it's innate in a lot of Iranians to want to be innovative and want to, go through that struggle. Because as you know, it is a struggle to create something from scratch. But it's always been in my mind. And not being, having been born there, it's always been part of my, plan and goal to want to be a part of that community and also give back. In ways that I possibly can, always.
Well, I certainly appreciate, your openness and being here, because, within this community, there is a lot of great engineers and scientists and entrepreneurs also, but like myself, like Babak on the call, but we come from a bit of a technical background, though you took the finance background and then acquired the technical knowledge. So on that note, I wanted to ask, I have a lot of discussions with, my friends within the network who are considering to become more business savvy as engineers. And one way that they think about is to say, go and do an MBA and then use that to land a job, say at a private equity firm, and kind of start to go in that direction to give them more versatility as opposed to just being an engineer. What's your view on that? Do you see it? I'm sure you've seen others who've kind of pulled this off and different ways to do it.
Yeah, no, I think the way I thought about it is, so one, is very hard to make that pivot. And I respect that any pivot, right? From a career standpoint or from a skill set standpoint, it does take a lot of ambition to want to do that. MBA is definitely one way, without a doubt. It's an expensive way. It takes dedication, takes a application process. You have to go through all of that. I think if you utilize the network of an MBA to actually help foster that pivot, I think it can be a great outcome, without a doubt. What I think a lot of folks maybe underutilize, especially when you're at a larger company, is companies are at a lot of times, and you probably see this every day, I think you're agnostic at some point to roles and responsibilities, and you're actually more in tune with talent and hard work.
Mm-hmm.
So a lot of these larger companies, I think, are actually much more open-minded to increasing the roles and responsibilities for any one employee, or any one group or department or employee within that group or department, because there is redundancies at these larger companies, we know, and there is repetition. So I actually think utilizing resources within kind of, not the HR departments, but within kind of your direct reporting hierarchy to say, hey, I have an interest in BD. So like, how can I best, what resources are here for me to actually get BD exposure? I think learning, by doing is going to always provide much more long-term value than an MBA or something on the academic side. I think both can be, the combination can be very helpful, but MBAs, like I said, the downside is it's 2 years, it's expensive. In an executive MBA, you won't have really any free time for 2 years because you'll be doing your day job and your night job. So I think another access point can be within your own company, and see if there's an openness and willingness to actually get another skill set within your group, and from there, you can talk about it, right? Then when you're trying to interview at another job, or if you want to start something, you already have a head start because you say, hey, I was involved in the negotiation of this new contract with this new customer, and yeah, I spent 80% of my time on the engineering side, but I was there for the key points, and you can storytell and you can actually narrate that event and that milestone.
So being proactive and go after what you want and ask for it.
Yep.
Because you 100% of the time you're not going to get what you're not asking for.
That's right.
And most of the times you will get it. So I see another question coming through. Actually, Adam, if you don't mind, I'm going to ask, if you're okay, can you please just unmute yourself and could just ask the question? I think that would be even a better way.
Sure. Thank you. Can you hear me?
Yes.
Okay.
Adam.
First of all, congratulations. It was a impressive story. Thank you for sharing that with us, and I'm very impressed with all of your achievements, and looking forward to hear more from you in moving the industry toward green energy. I just recently, actually, you talked about MBA. I am finishing my executive MBA in Texas A&M, graduating in 2 weeks, and through the program with a classmate of mine, both we have engineering and manufacturing experience in oil and gas. So we thought that manufacturing is kind of overlooked in the startup environment, a lot of attention to digital products. So we thought that maybe we can use our expertise and the manufacturing facility that we have for helping some startups in that arena. And so we started this sort of a incubator to help early stage startups to develop their product. We can help them to do that with less amount of capital and much faster than usual. We have a very experienced team and state-of-the-art facility. My question is that right now our challenge is how to reach out to startups. We are looking for channels to bring more startups or reach out to more startups. And you mentioned that you had a lot of turnovers and talking to different startups in a very high volume. So I appreciate if you can help us to find a more effective channels for that matter.
Yeah, no, and Adam's also, first, congrats on the finishing the executive MBA. Hopefully that's I'm sure, I know that was probably a long and kind of strenuous process. So congrats on that.
Thank
I
you.
think for resources and getting access to resources, I think is the name of the game for any business, right? From an incubator standpoint, I think today with technology and social media, it might sound cliche, but I really think premium subscription to LinkedIn for me was really, from a personal standpoint, opened my eyes a lot, because you were able to see a lot more than you did on the free subscription, and it was cheap. All things considered, it was inexpensive. I think LinkedIn is interesting because you're able to actually see and connect the dots between people and trends that you're seeing in the industry. So for energy transition, obviously LinkedIn is a great resource. and I wouldn't underestimate it. But I think having, capitalizing on what A&M brings to the table from the incubator standpoint and what A&M can offer, I think can be a big selling point. But I think beyond that, there are resources out there that are, either on a trial basis or again using maybe the A&M brand. Like for example, like PitchBook. PitchBook is a service that you can access any company from seed standpoint or seed stage all the way to a public mature company, and you can filter when this company was. For example, I want to see industrial automation companies that founded in the last 3 years, and it'll list every single company. You can click it, see who the teams are, and from there you can match it with social media or LinkedIn, or you can see what mutual connections you may have, and you just network and get in front of the right person. That's maybe not the best answer, Adam, but I think using those resources is a fairly efficient way to do it. Obviously, the best way is, in my opinion, has been panels and conferences. A lot of these, especially on the decarbonization standpoint, there's a lot of conferences that are virtual, where you can actually hear CEOs talk about their companies, and they're always open to speak. Generally they're always, I think Moji is always open to talk to people that that are in panels that you're speaking at. But that's another way too. Conferences and panels, and you can see the attendee list. You can reach out before, you can follow up with Q&A after, and there's ways to kind of get in front of people. So those are the 2 or 3 ways that were helpful for me.
Thank you.
Thanks, Adam. And the other, and I'm thinking about how we met.
Yeah.
I think it was through a common connection that kind of connected the dots. It's like, hey, you guys need to talk.
Yep.
Knowing what each of us was doing, and I think that speaks to importance of building your network along the way.
Yep.
And I've noticed, you've introduced me to people at Morgan Stanley that you worked with 10 years ago.
Yep.
But they still, they have a memory. They very clearly remember, hold you at high regard. So what is kind of, some ways that you have implemented in more thoughtfully build this network along the way? Because at the end of the day, in life, like your network is really the currency of your life.
Yeah.
And how you feel and what you are able and not able to do. So,
yeah, I think not only asking for things is usually step, it seems to be human nature typically wants to reach out to someone to get something in advance, right? I think a relationship that you keep for, a decade or more should always be 2 ways. And everybody is looking for something, right? Bankers are looking for new clients to one day help them with an M&A transaction, help them with an IPO or capital raising event. And just because it doesn't happen day one, the introduction is huge, because that, again, just like you were saying, Adam, it's very hard to actually get in front of that founder 8 years down the road when they're on the front page of every newspaper and magazine. It's tough to get in front of them. So I think being able to bring something to the table, even if it's not valuable today for that that particular party, I think is can be a very effective way to do it. But I think generally there's always mutual goals, whether it's founders, whether it's bankers, whether it's investors. There's always a mutual goal, and the general premise is there needs to be capital for startups to actually thrive. But without startups thriving or coming up with new ideas, there won't be capital either. So it's a 2-way street, and I think reminding folks that hey, there is a 2-way street here, I think is also, it's part of the game, right? It's a very yin and yang process, and it's not a one-way direction. That's, I think, the main thing.
Absolutely. We are coming to the end of the session. Actually, there's I see 1 minute, and we want to be diligent with the time. And thank you again. Hopefully by now everyone has added you on LinkedIn and have already done their stalking, like and everything else. If not, please go ahead and do so. But I wanted to hand it over to you if there's other things that you wanted to share that I didn't ask, or different ways that what you're looking for, what people, ways to reach out to you in your journey, and making this more of a a connection that could be grown from here, because this is another way that, now Adam knows you. So you're talking to a lot of the same startups, maybe that could help his initiative as well.
No, of course. So Moji, thanks for moderating, this podcast. I think it's been great. And obviously, happy to talk to, really anyone that has an interest to speak about, either my career and perspective or ways, that I could be helpful. Honestly, I'm a big believer in, how you spend your time, shouldn't necessarily be one-dimensional. I think speaking and learning about what other people are doing, even if it's not directly what you're doing, is really the key kind of gateway to expand your mindset and actually, provides ways for you to actually think about new and bigger ideas. So I'm a big believer in that. So feel free, anyone, to reach out to me on LinkedIn, and would be happy to be a resource or help or talk about really anything.
And you mentioned, of course, this is a virtual meeting, but we do have also APPIH happy hours.
Nice.
In Houston, there's one coming up. I think Hamid, you could add here. I think it's next week. So if you're in town, I'll make sure that you have the information.
That sounds good.
If anyone is attending, that could be another opportunity to meet in person as well.
That sounds great.
Awesome. Well, thank you so much for your time again. And Hamid, I want to pass it on back to you if there's other finishing thoughts, announcements that you wanted to make before we close out.
Thank you so much. Thank you, Moji. Thank you, Nader. It was very, very informative session, and I really appreciate the time that you spent. Just as Moji said, for the happy hour, every month, last Thursday, we have a happy hours, and the next one will be next Thursday, April 28th, 5:30, Houston, Dish Society, 4191 Bellary Boulevard, Houston. And you can join our social media, YouTube, Instagram, Twitter, and also in Telegram. You can find us, and we are almost everywhere. And we will be more than happy to see you in person. Thank you so much.
Lovely. All right. Thanks, everyone. And thanks again, Nader, for being here.
Thanks for having me. Thanks for having me.
Thank you. Thank you.
Bye.
Bye, everyone.
Bye.